Morning, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. I'm Mark Gardner. It's the 29th of October, 2025. Wall Street feels like Groundhog Day. Stocks hit another record. I was almost tossing up whether to even bother this morning, to be honest, because you could almost cut and paste yesterday's morning report into today. It was all the same reasons: optimism on China, US trade deal, optimism on a Fed rate cut, and more AI deals realistically with OpenAI. So, for those of you who don't get the reference, Groundhog Day was a movie with Bill Murray back in the I think probably the 90s, where he had to repeat the same day over and over again. Yesterday, look, I was really positive on the ASX yesterday, and I know I said, probably buying the open and it grinds higher. Nothing's really going to stop it over the course of the day. Little did I know that two of the market darlings on the ASX, WiseTech and CSL, both copped an absolute hiding yesterday. I put my hand up there, completely wrong about yesterday for the ASX. I really did think that we would have seen some form of buying in particularly around that mining sector, etc. But when one of your biggest tech companies or if not your biggest tech company and your biggest healthcare company both drop around about 16%, and there's massive panic, particularly those market darlings. Part of the reason why those things fall so much is that people aren't really prepared. Because it's WiseTech or it's CSL, they never go down. And then I think investors get very complacent with those positions. We saw a similar thing in ResMed, actually, when the Ozempic drugs came out. I think people's lack of preparation leading into that, that drug release, which ended up being a storm in a teacup. But it caught investors off guard, because essentially those stocks like ResMed, stocks like CSL and WiseTech, investors in those stocks have never been in trouble, so they don't know how to handle it when things don't go wrong. So don't go their way. So so that's where the hourly strong sell comes through in the Aussie. Everything else, look, the Russell's back to neutral. We're not quite, and the Nikkei and the Hang Seng both buys. Trump is seeing the Japanese Prime Minister. They're going to try and secure some rare earth supplies. Canada did do a deal with China directly on EVs as well. So in an effort to wean off your dependence on the US. So I think that's probably an unintended consequence for Trump, where Canada, which is quite often called Junior America, has gone and sided with China. So one side of the border you're going to have a bunch of people driving around in $12,000 cheap EVs, and the other side you're going to have people driving extraordinarily expensive cars, it's probably the start of and potentially a number of deals. You can't run around pushing people into the dirt and not expect there to be some form of backlash and countries to try and wean off dependence on the trade relationship with you. So and as you can see, the Dow up 0.3, S&P up 0.23, NASDAQ up 0.74. And look, the weekly gains are around 3.5 for the NASDAQ, 2 for the S&P. There really wasn't too much on terms of earnings. United Health lifted its annual adjusted income forecast. Quarterly earnings topped Wall Street estimations. The CEO is aiming to reposition the healthcare insurance giant to be a bit more durable and accelerating growth next year. It was up about 3 or 4% in pre-market trade, but only ended up about 0.5%. There would be some very full investors who bought the dip about 3 or 4 times on the way down with United Health. So I would say that's probably just people maybe taking some money off the table potentially. UPS, which is not a bad indicator of a bellwether in terms of the economy. Their third quarter earnings significantly exceeded analyst expectations. They've actually got so many packages. There's volume challenges in the domestic segment. That probably supports that consumer numbers, and that sort of what people as anecdotal quotes about there being panic buying leading into the tariffs, and that's what's been pushing up the retail trade numbers. But look, as I say, that's a little bit anecdotal at this point. Interestingly, PayPal, not an earnings thing, they announced that they'd signed an agreement with OpenAI to embed their payments wallet in ChatGPT. Now, it doesn't sound like much, but what it does is fairly significant in terms of, you can be in GPT and go, book me a holiday, find me a T-shirt, or all those sorts of things, but then pay for it within the app. So GPT almost becomes almost instantly more agentic in terms of its use case. You're not having to then leave GPT and then go outside to the website to go and make those secure payments online. It was a bit of a footnote in most of the in most of the things I read this morning. It wasn't even mentioned on Bloomberg, but in terms of how AI apps and things are going to work, like Perplexity and ChatGPT, etc., having those payment systems and in there would be it gives you less reason to leave. At this point in time, my browser on my phone, I don't even use it. I just use Perplexity. But having to leave the app and then go to Google for certain or Chrome for certain tasks. But this will limit that even further. So I dare say that's why Google was down maybe a little bit overnight, because that does threaten that Chrome dominance and monopoly. But as you can see, really, like we eked out record highs, but it was all Nvidia and it was all Broadcom. And I did mention yesterday they had that conference in that Nvidia conference in Washington. So look, when Jensen goes out and puts on a show, Nvidia being up 5%, pretty standard, really, because he's a pretty inspirational character. He's highly intelligent, and he gives the people what they want. He's a great showman as well. So the positivity in this section of the market, Intel, etc. Intel, Broadcom up 3, Nvidia up 5. And Microsoft probably up 2 because they did another deal with an agreement with OpenAI that values their stake in the company at about 135 billion. That sort of helped things a lot. That helped Microsoft higher as well. So, but the rest of the market was off. You've got massive sections of red in the banking sector, the healthcare sector. Outside these Mag 7 and the chip stocks, nearly every stock in them, everything on that map's red. So, and that price action yesterday in the Aussie as well, it gives me. I don't like price action like that, and I don't like a market map like this where it's basically been held up by 6 to 10 stocks. We really rallied. The reasons that the financial press are giving is just a cut and paste job from yesterday. As I said, it feels very Groundhog Day. There was no new news. We've got the Fed tomorrow morning, and we've obviously got earnings from Microsoft and Meta. So we've had a lot of positivity, particularly in the last 3 months since the last earnings on these AI stocks. I would be very surprised if the revenue can match up to investor expectations. All these companies will likely beat. That's kind of the way it works in the US. It doesn't necessarily mean they'll rally. So I'm a little concerned about investor disappointment because we're up now 41% in the S&P. It is the largest relative bounce in 6 months in history by a significant amount. It's a third better bounce than even the bounce out of COVID, and it makes previous 6 month bounces out of technical bear markets, which are down 20%. It just dwarfs them. It's double most of the top 10. So these guys are going to have to bring out special results for this market to stay up here, because this AI rally now is actually, or this 6 month bounce out of April's lows. Even if you factor in AI being an industrial revolution style event, we're probably still a record bounce, or equal with the record bounce out of COVID, which involved a lot of money flow and the world shutting down and then being reopened again. I'd be very surprised to see. I wouldn't be surprised to see this thing run out of steam up here, and we're certainly moving to quite a bit of a risk-off attitude here. Gold, commodities was really quiet, except for uranium, which will be that next-gen deal with Google overnight. Uranium just was on an absolute tear. It doesn't surprise me. It's, to be honest, I'm just, the only thing I'm not surprised about is that A, it's not higher, and B, that it didn't happen 2 years ago. It's the obvious choice for the energy transition moving forward, for low carbon energy. Just AI has just added cream on top of that, and they've got the money to spend. So crude was down a little bit, but look, not much in terms of commodities, etc. Not much to really speak about. I won't bore you any longer. If you want to go and sign up to our AI automation, robotics, future investing, we've got a few stock picks in there and some structured investments you can possibly have a look at as well. You get a free ebook. It is on Melbourne Cup Days, so there is an on-demand version of it after. Check the comments and stuff to register. It is free and it'll go for about 45 minutes or so. But apart from that, guys, have a great day, and yeah, we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.